Hello and welcome to our web chat on how to close a corporate treasury department down. We are joined by Julia Fordham, ex-Old Mutual PLC Head of Funding at Risk in their group treasury, who was heavily involved in closing of the Old Mutual corporate treasury department. Julia has performed various roles in treasury management, most recently with her Old Mutual role, and prior to that as Chief Ops Officer at Morgan Stanley's EMEA Treasury during the financial crisis of 2008. And she started her career at Barclays. And interestingly, she also plays the saxophone. She's not going to be doing that today, though. Closing a corporate treasury department is a complex task with many different dimensions, far more than I imagined. But before we start, Julia, can you give us some background as to why it was necessary to close Old Mutual's corporate treasury department?
Yes, Old Mutual is or was a diversified financial services conglomerate with a holding company which was listed in London and Johannesburg, and had taken the decision to undergo a major separation, known as the managed separation, basically to break up the group into its four constituent parts via a demerger. Before the separation, the holding company owned four separate operating businesses. There's the personal investments, insurance in the UK, banking in the form of Nedbank in South Africa, the original Old Mutual insurance business in South Africa, and a US asset management business. And some of those businesses were run very independently. One was sold very early in the separation process. And that left us with a group treasury at the holding company level where I was sitting. And in the end, just two major business units with treasuries, one which was working with a centralized model, which was executing trades through the group treasury, and one which was fully decentralized.
So what were you trying to achieve? What were your objectives?
Well, the overriding objective was to close down the group treasury in a way that was safe, because the decision had been taken to move the holding company, the UK holding company of the group, to become a subsidiary of a South African entity. And that was only one of several strategic routes that could have been taken, which were all examined over a period of several weeks and months with our advisors. But that eventually was the route that was needed to be taken.
So that then led to the second objective.
Yes, and at the same time we had the UK Wealth Management Division, which is now known as Quilter PLC following its flotation. And they were executing a wide range of treasury transactions, mainly foreign exchange, through a group centralised model. But obviously prior to their flotation, they needed to become a fully independent standalone treasury.
And then what's this third objective?
So the holding company, Old Mutual PLC, didn't disappear altogether, obviously, and it became a subsidiary of a South African entity. And as such, as a legal entity, it still has some residual activities that it performs. At the point where I left, it still had some debt outstanding, and so there were still some transactions that needed to be supported, either by outsourcing that to a completely external party, or as we actually did, to transfer those activities to our treasury colleagues in South Africa.
So if we look at the process that you went through to do this, there are obviously strategic objective actions and there are operational. Can you talk us through this? Because this looks quite complex to me.
It certainly was, and what this diagram doesn't show you is the sort of many streams of concurrent timing in all of the various plans, which would be and was very complicated. But it's probably best to start with the more strategic aspect of this. I've talked a bit about the fact that there were several ways of achieving the separation. Once one of those methods had been chosen, it involved the need to very much tidy up the balance sheet of Old Mutual PLC to satisfy the South African regulator that this was an entity that they could accept as a subsidiary of the South African business. And that involved, for the group treasury, mainly reducing debt. So we had to set about the task of liability management, executing, I think, 2 and 3 open market tenders, cancelling bank facilities, but generally sort of making sure that we reduced the bonds we had outstanding as much as possible.
So on the operational side, that also looks quite complex.
It was, and that the operational side of things initially it looks quite straightforward because, of course, when you start with a function that's in existence, you think, well, I'll just sort of close that down. But we weren't really able to start concentrating on that until the main overall strategic plan to reduce debt had really pinned down and determined. So first of all, we started with the first aspect, which was, what's your plan for actually terminating all of your Treasury contracts? We had various Treasury systems that we're using, Treasury management system, and various other systems that supported that and went around it. When were we going to be able to actually issue termination notices on those contracts? What were the notice periods? What would that involve, etc.?
And does that apply to these 2 other actions?
Well, the situation was definitely complicated by the fact that we had another business unit centralised along with group. So to some extent, or to a great extent, our timing was determined partly by the fact that we had to kind of disentangle their own activities from our own. And of course, because we were sort of all corporate citizens, support them in becoming a standalone independent function. So helping with, some advice on treasury management systems, looking at their plans for RFPs, for system providers, that kind of thing. And we spent a great deal of time also in information, educating on our processes, telling them what we thought best practice was, but also trying to help them not make the mistakes that we've made in setting up our function. I mean, there's always with the benefit of hindsight, you perhaps wish you'd done 1 or 2 things differently. So it was great to be able to say, look, I wouldn't go with this one, I'd go with that one.
And overall, what were the biggest challenges here? Because, again, it seems quite complex to me.
I think the biggest challenge was the multiple strands of this project. Again, from the outside, it might look as though closing down a function is relatively straightforward. But when you consider how many things were having to go on at once, that's always challenging. And in fact, the sort of point 3, and handing over the remaining activity to our South African colleague, again, on the face of it, sounds quite straightforward, and they had their own sort of function set up down there, etc. But the amount of work involved in assessing whether controls would cover what we needed them to, whether we could get comfortable with that outsourcing, and more than that, satisfy the regulator, the PRA, that outsourcing was going to be satisfactory. You consider that had to be done sort of right at the end of effectively a 2.5 year project, under extreme time pressure, because we hadn't been able to start it before. I think that the sheer complexity of multiple streams is the issue.
So if you bring all this together, what did you learn?
Many things. I think that the overriding lesson here is that closing a treasury function is, I'm going to say, at least as complicated as setting one up. It may even be more complicated than setting one up, unless you're starting with a complete blank sheet of paper, because you have all the legacy issues that you've probably created yourself over the years, but just exist because they do. And there's no blueprint for how to do it. Whereas I think if you were to look even on the internet or speak to any of the sort of professional advisors around, there are probably several blueprints for checklists for what to think about in setting up a treasury department, but not for closing one down.
That's really quite interesting. How it's more, in a way, it's more complicated. But this second point, I don't really understand. When you set up a corporate treasury department, you need to think about closing it down.
Well, I don't mean to sound at all negative in that. I think let's frame that more positively and say that, as so often with corporate treasury, the devil is in the detail. So when you, for example, put in place facility documentation, or you sign ISDAs, or you put in place intercompany loan structures. And you think about the implications of what you're signing up to, and the covenants and the triggers in those pieces of documentation, or complexity of an internal loan structure. And you wonder if you're ever going to have to look at it again. Well, I think the lesson is, well, just assume you are going to have to look at it again, because Treasury closures are not as unusual as you might think, and certainly companies do often go through major restructuring. So if you ever have to unwind and or change what you've done in any way whatsoever, you really need to be careful to make sure that you sort of dotted all the I's and crossed the T's in the first place. And I think one thing that's really key to that is making sure that you have strong group-wide governance. You know, the ability to look across, particularly a large group, and know where all the triggers might be for your debt covenants, and which business units might be capable of breaching those, or which might have documentation in place that might trip you up in that respect. It's really important, and you can only get that right really by making sure that you do it as you go along over the year.
So do you expect you'd get resistance if you, in setting up a new Treasury department, you insisted on all this new level of detail that probably you didn't expect to need when you first set up?
I hope not. I think anybody who's trained in Treasury will understand the need for that. Put it this way, I can point to practical examples now. If anybody ever challenged me on to have great monitoring systems in place, or needing to have standards in place that made sure you understood what your business units are doing in terms of borrowing, then I could provide many examples of why you do need that.
And your final point, it's a significant change management project. I get that, but I didn't expect some of these conclusions. Can you explain?
I mean, I think you just have to bear in mind that people are involved. I mean, I've talked a bit earlier about the complexity of the concurrent work streams in terms of timing. But I think if you look at change management textbooks, they will tell you that people's emotions need managing alongside everything else. And in this respect, our jobs were disappearing. So you have to bear in mind that you're sort of keeping people on board and motivated and interested in a project which, whilst it was very exciting and it's fascinating, is ultimately going to mean that they're doing themselves out of a job. So I think that one thing that we found was very important, not just for the business unit that was becoming independent, but also for the people in Group Treasury, was constant communication, trying to make people feel as included as you possibly could within bounds of confidentiality, and bringing as many people over the wall in terms of confidentiality as you reasonably can, as long as it's safe. And just manage people's emotions, because sometimes people are feeling very excited about the prospect of what they're doing, and sometimes they're not. And I think people get tired, and it was a very long process. And I don't think anybody on the team would disagree with that. It did take a lot longer than expected, and that's I think that is often the case with change management projects.
And that really leads me to the question I started, which was, did you have difficulty in keeping the team for longer than they expected?
I think that's more of a slightly tongue-in-cheek comment. I think that all I would say is that all Treasury people were working flat out until the days they left. I mean, and even right up to the hour they left in some cases, because I think generally big companies do have a good understanding of what Treasury people do, but people get used to the fact they can just wander over and say, oh, we've got this capital infusion to be made or this payment to be made, and when you say, yeah, I'm sort of leaving today, it always comes as a surprise. So almost you maybe need to have a kind of secret leaving date to get people used to the fact that you're not there anymore.
What would be your overall conclusion from this experience, I think is the word for it?
I think you've always suspected that nobody realises how much a Treasury team does until you haven't got one anymore. I think that's definitely true. It's a very exciting project, but you do, I think, we realised how much the Treasury Department was valued.
And my final question would be, what is the single thing that surprised you that you really didn't expect?
Be prepared to say everything several times and be patient about that. When you have a plan that you think everybody understands and has bought into, you still have to accept that you need to build understanding. And if that means repeating yourself 3-4 times, just do it, because nobody understands everything the first time, and nobody can communicate everything to a large team once and expect them all to understand it. So over communicate.
Absolutely fascinating. Thank you very much, Julia.
Thank you.